Top 10 ways introverted thinking can bridge the wealth gap. 1. Long-term thinking over short-term flash. Introverted thinking naturally leans toward internal validation, which changes how money decisions are made. Introverts are less influenced by status signaling, hype cycles, or social pressure to look successful now. Because of this, they're more willing to delay visible rewards in favor of outcomes that compound quietly over time. Here's how that bridges the wealth gap in practice. Delayed gratification becomes a strength instead of chasing quick income spikes. Introverts are more comfortable investing time into education, certifications, trades, or skills that pay off years later. This creates earned leverage, not fragile success. Investing over impressing money is more likely to flow into assets, stocks, businesses, tools, property, rather than depreciating status purchases. This difference alone compounds dramatically over decades. Less exposure to hype-driven losses. Introverts are less likely to FOMO into trends, meme investments, or flashy opportunities pushed by loud consensus. This reduces catastrophic financial mistakes that reset progress to zero. Compounding becomes the strategy. Long-term thinkers understand that wealth grows through consistency, small investments, steady skill growth, and patience. Compounding rewards quiet discipline, not constant excitement. Identity isn't tied to immediate results because self-worth isn't dependent on visible wins. Introverts can stay committed when progress is invisible. This allows them to endure the boring middle where most people quit. Strategic career moves instead of lateral noise rather than job hopping for short-term pay bumps. Introverts often make fewer but more calculated moves that increase long-term earning power, ownership, or autonomy. Short-term flash creates attention. Long-term thinking creates freedom. This mindset doesn't just grow wealth, it protects it, which is how gaps truly begin to close. 2. Deep focus and skill mastery. Introverted thinking excels in environments where depth matters more than visibility. While others compete for attention, introverts quietly build capability, and capability is one of the strongest bridges across the wealth gap. Here's how deep focus turns into economic leverage. Mastery creates scarcity. High-income skills reward precision, not popularity. Whether it's electrical systems, CNC machining, coding, data analysis, or financial modeling, mastery makes you hard to replace, and scarcity drives pay. Skill, social capital. Introverts rely less on networking and more on competence. In many fields, results outperform charisma. When output is undeniable, opportunities come to you. Quiet repetition builds exponential advantage. Introverts thrive in sustained practice, hours others avoid. This leads to faster compounding skill growth, while peers plateau at surface-level ability. High signal, low-noise learning-focused environments reduce distraction, allowing introverts to absorb complex systems deeply. This leads to better decision-making, fewer errors, and higher trust from employers or clients. Leverage without burnout. Instead of chasing attention or managing constant relationships, introverts increase income by raising skill value. Fewer social demands mean energy goes into performance, not presentation. Ownership and autonomy opportunities. Skill mastery opens doors to contracting, consulting, solo operations, or small business ownership, paths that scale income without scaling social exposure. Long-term income stability. Highly skilled workers face less volatility. Even during downturns, specialists retain demand while generalists are replaced. Noise gets noticed. Mastery gets paid. Deep focus doesn't just raise income, it builds control, which is the foundation of long-term wealth. 3. Risk awareness. Without impulse, introverted thinking approaches risk internally, quietly, and deliberately, and that restraint is a major reason it can narrow the wealth gap over time. While impulsive decisions create dramatic wins and devastating losses, introverts focus on staying in the game. Here's how that mindset translates into real financial advantage. Downside is evaluated before upside. Introverts naturally ask, what happens if this fails? This prevents over-leveraging, reckless borrowing, and all-in bets that wipe out years of progress. Emotion is separated from decision. Less reaction to hype, peer pressure, or social comparison means fewer panic buys, panic sells, or trend-chasing investments. Stability beats adrenaline. Capital preservation comes first. Wealth gaps widen when people lose what they already have. Introverts instinctively protect principle, understanding that preservation is just as powerful as growth. Fewer catastrophic mistakes. One bad financial decision can undo a decade of effort. Introverted risk assessment reduces exposure to scams, unsustainable ventures, and unrealistic promises. Patience beats volatility rather than needing constant action. Introverts wait for clarity. This reduces transaction costs, timing errors, and stress-driven choices. Risk is measured, not avoided. This isn't fear, it's calculation. Introverts still take risks, but they size them appropriately, test before scaling, and exit when assumptions break. Resilience during market cycles. When markets swing, introverts are less likely to overreact. Staying calm during downturns allows compounding to continue while others self-sabotage. Most people don't lose money because they lacked opportunity. They lose it because they moved without thinking. Introverted risk awareness doesn't make wealth flashy, but it makes it durable. And durability is how gaps close over generations. 4. System building, not hustle culture. Introverted thinking prioritizes structure over adrenaline. Instead of relying on constant motivation, introverts design systems that quietly keep working. This is one of the most reliable ways to bridge the wealth gap. Here's how system-based thinking becomes financial leverage. Income that doesn't depend on mood. Hustle culture collapses when energy drops. Systems don't. Automated savings, recurring investments, and scheduled bill payments ensure progress even on low motivation days. Budgets as feedback loops, not restrictions. Introverts view budgets as information systems, signals that reveal leaks, patterns, and optimization opportunities rather than emotional limitations. Automation eliminates decision fatigue by reducing daily financial choices. Introverts avoid impulsive spending and conserve mental energy for high-impact decisions. Routine beats willpower. Consistent habits, weekly reviews, monthly reallocations, annual goal adjustments outperform bursts of effort followed by burnout. Scalable wealth without visibility. Systems allow money to grow quietly. Dividends, reinvestment plans, tool upgrades, skill compounding, no audience required. Resilience during disruption. When income fluctuates or life gets chaotic, systems stabilize outcomes. Emergency funds, buffers, and contingency plans absorb shock. Focus shifts to optimization, not survival. Once systems handle basics, introverts can refine strategy, negotiating better rates, improving efficiency, or reallocating capital. Hustle needs constant fuel. Systems run on design. Wealth gaps shrink when consistency replaces chaos. Introverted thinkers don't chase momentum, they engineer it. 5. Independent learning. Introverted thinking thrives in self-directed exploration, where curiosity isn't performative and learning isn't rushed. This quiet advantage compounds into financial literacy and ownership, two of the most powerful tools for narrowing the wealth gap. Here's how independent learning turns into economic leverage. Depth over surface knowledge. Introverts don't skim, they study. This leads to a real understanding of money, markets, contracts, and systems, not just slogans or viral advice. Financial literacy becomes self-defense by independently learning about taxes, credit, interest, fees, and compounding. Introverts avoid costly traps that quietly drain wealth over time. Ownership paths are discovered early, while others focus only on income. Introverts research equity, small business ownership, tools as assets, intellectual property, and long-term plays that build control, not just cash flow. Learning without ego pressure. Because learning happens privately, introverts aren't embarrassed to start from zero. This accelerates competence, while others avoid knowledge gaps, to protect image. Pattern recognition across disciplines. Independent learners connect dots between finance, psychology, labor, and systems. This reveals opportunities others miss, inefficiencies, arbitrage, and leverage points. Reduced reliance on experts. Self-education lowers dependency on sales-driven advice. Introverts verify claims, read fine print, and understand incentives before committing capital. Adaptability. Over time, markets evolve. Those who learn independently aren't locked into outdated models. They adjust strategies as conditions change. Most wealth isn't hidden. It's ignored because it requires study. Introverted learners don't wait for permission or popularity. They quietly educate themselves into autonomy, and autonomy is how gaps begin to close. 6. Reduced lifestyle inflation. Introverted thinking is less driven by comparison and visibility, which quietly protects wealth. While lifestyle inflation traps many people into earning more just to spend more, introverts are more likely to keep their cost of living stable as income rises, and that difference compounds massively over time. Here's how reduced lifestyle inflation bridges the wealth gap. Spending isn't used as identity. Introverts don't rely on purchases to signal status or belonging. This prevents money from being drained into cars, clothes, tech, or experiences meant to impress others rather than serve real needs. Income growth translates to assets, not expenses. Raises, bonuses, or business income are more likely to be invested, saved, or reinvested into tools, skills, or ownership instead of upgrading lifestyles. Lower fixed costs equals higher flexibility. Keeping expenses low reduces dependence on high income. This allows introverts to take smarter risks, investing, starting a business, or weathering downturns without panic. Less social pressure, spending without constant participation in trend cycles, nightlife, or image-driven environments. Introverts naturally avoid recurring costs that quietly erode long-term wealth. Compounding has room to work. Money not spent has time to grow. Reduced lifestyle inflation gives compounding the space it needs to outperform flashy income spikes. Wealth becomes quiet, but real introverts often appear behind because they don't broadcast success. In reality, net worth grows invisibly while others stay trapped on the earning, spending treadmill. Long-term security over short-term comfort. Introverted thinkers trade momentary upgrades for future autonomy, less stress, more control, and options others can't afford. Most people don't struggle because they earn too little. They struggle because their spending grows faster than their thinking. Reduced lifestyle inflation doesn't feel exciting, but it's one of the most reliable ways introverted minds close financial gaps over time. 7. Strategic patience. Introverted thinking is naturally aligned with time-based advantage. Instead of rushing outcomes, introverts understand that real wealth is built through consistency, positioning, and compounding, not speed. This patience quietly narrows the wealth gap while others burn out or reset. Here's how strategic patience becomes financial leverage. Consistency outperforms intensity. Introverts don't rely on bursts of motivation. They show up steadily, investing monthly, refining skills, improving systems, allowing compounding to do the heavy lifting. They stay in the game longer. Wealth is often won by those who don't quit. Introverts tolerate slow progress and delayed feedback better, avoiding the cycle of starting over that keeps many people stuck. Timing is respected, not forced. Rather than forcing outcomes, introverts wait for favorable conditions, better entry points, clearer opportunities, stronger positioning, reducing unnecessary losses. Boring phases are accepted. Most wealth building happens in unexciting stretches. Introverts are comfortable here, continuing to build, while others abandon slow strategies for flashier ones. Career growth is layered, not jumped. Instead of chasing titles or rapid promotions, introverts stack competence, trust, and leverage, leading to durable increases in earning power. Entrepreneurship is built methodically. They test, refine, and scale cautiously. This reduces failure rates and increases survival, key factors in long-term wealth creation. Compounding multiplies small advantages small, patient decisions, early investing, reinvestment, skill upgrades, multiply over time into outcomes that look sudden but weren't. Speed creates noise. Patience creates position. Strategic patience doesn't just grow wealth, it protects momentum. And momentum preserved over time is how introverted thinkers quietly close financial gaps. 8. Behind-the-scenes value creation. Introverted thinking thrives out of the spotlight, where impact matters more than recognition. Many high-value, wealth-building roles operate quietly, producing results that earn income and influence without requiring constant social performance. By excelling here, introverts can bridge the wealth gap while others chase attention. Here's how behind-the-scenes work translates into financial advantage. Results speak louder than personality. Introverts excel in roles where measurable outcomes, projects completed, systems optimized, problems solved, carry more weight than charisma or self-promotion. Employers and clients reward performance, not spectacle. High-demand skills are often invisible. Engineers, analysts, estimators, and technical creators produce critical value that few can replicate. Scarcity of skill creates leverage and higher income potential. Less social overhead means more productivity. Introverts can focus without distraction, completing complex tasks faster and more efficiently than those who rely on networking or visibility to advance. Ownership and impact without the spotlight. Roles behind the scenes often provide opportunities for equity, profit sharing, or process improvement bonuses. Introverts capture value quietly, compounding wealth without public recognition. Reduce career politics. Focusing on substance over image minimizes energy spent navigating office politics or hype-driven culture, allowing more time for skill development, investment research, or side ventures. Invisible influence adds up even without leading meetings or public-facing roles. Introverts create systems, solutions, and efficiencies that generate wealth for themselves and organizations, sometimes faster than visible leaders can. Sustainable wealth without burnout. By thriving in environments that match their natural focus and energy, introverts can build high-value careers without the emotional exhaustion of constant social performance, leading to more consistent long-term earnings. Most people chase the spotlight. Introverts build the machinery that pays the spotlight chasers. 9. Boundary-driven decision. Making. Introverted thinking excels at setting clear internal limits, which protects both money and energy. Strong personal boundaries prevent financial leaks caused by social pressure, comparison, or emotional obligations, one of the most underrated ways to bridge the wealth gap. Here's how boundary-driven decisions create financial leverage. Saying no protects capital. Introverts are more comfortable declining expensive social activities, peer-driven purchases, or lifestyle upgrades that don't align with long-term goals. Every no preserves resources for assets and investments. Reduced impulse spending from social pressure without needing external approval. Introverts avoid buying trends, gifts they can't afford, or status symbols to fit in. This keeps cash flow directed toward wealth building rather than appearances. Preventing emotional financial traps. Introverts think before acting, avoiding emotional spending, helping friends or family at unsustainable levels, or overcommitting to obligations that don't serve long-term financial goals. Clarity and prioritization. Boundaries create space for intentional decisions. Saving, investing, and skill development take priority over fleeting wants. This creates compounding advantage over time. Limits debt exposure. Introverts are less likely to succumb to pressure-filled loans or credit traps because they respect their financial limits and plan decisions in advance. Focus on value, not validation. Spending becomes deliberate, not performative. Money is used to acquire tools, education, or investments that produce lasting returns rather than temporary applause. Long-term autonomy over short-term approval. By holding firm to internal rules, introverts build financial freedom. Decisions are guided by goals, not by someone else's expectations. Most wealth is lost quietly. Introverts protect it quietly. 10. Internal validation over external approval. Introverted thinking thrives on self-assessment rather than public approval. When self-worth isn't tied to applause or recognition, financial decisions are made from clarity and strategy instead of ego or peer pressure. This mindset creates long-term wealth and bridges the wealth gap quietly but powerfully. Here's how internal validation translates into financial advantage. Spending reflects goals, not image. Introverts don't buy things to impress others. Money is allocated toward assets, investments, skills, and experiences that generate real value rather than superficial approval. Investing decisions are rational without seeking approval. Introverts evaluate opportunities logically, focusing on risk, return, and sustainability instead of trends or what everyone else is doing. Freedom from lifestyle comparison. Social media and peer pressure can push people into unnecessary debt or lifestyle inflation. Internal validation frees introverts from these traps, preserving capital for compounding. Reduced emotional financial responses. Decisions aren't driven by fear of missing out, guilt, or desire for admiration. Introverts respond to data, research, and long-term goals, not fleeting emotions. Long-term planning over instant gratification. Introverts are more comfortable delaying rewards, prioritizing investments, savings, or skill acquisition over short-term satisfaction that doesn't advance wealth. Control becomes the priority. Money is treated as a tool for autonomy rather than a measure of status. This perspective fosters decisions that increase options, security, and leverage over time. Avoidance of risky, image-driven moves without needing to prove themselves. Introverts avoid flashy but dangerous investments or entrepreneurial moves meant to impress rather than perform. External applause fades. Internal clarity compounds.